we have these incredible healthcare workers out there fighting this virus daily, and we have a lot of hospitals that are suffering financially during the process. It seems counterintuitive to have your frontline workers battling, but the people who are supporting those frontline workers, those hospitals, are having tremendous difficulties managing their costs during this virus. There is a lot of information in this report. It's a historic report, and the actual numbers, haven't been this high since probably the Depression.
So from March to April, 21 million jobs were lost in the U.S. economy. So monthly non-farm payrolls report, as we know it, only goes back to 1939. So that is hands down an observable record. To your point, there's discussion about how during the Great Depression, unemployment rate may be edged as high as 80%. We don't have that data. But if you just look at the chart of the monthly non-farm payrolls report, it really just sticks out like a sore thumb. It's multiples higher than anything we've ever seen before. And another important thing to note is the survey period was the week ending April 18th. So, and we know a lot more unemployment claims were filed since April 18th. So the monthly non-farm Bureau of Labor Statistics report still has to catch up with what's actually going on. That's the first thing. The second thing is if you really get into the nitty-gritty of the report, over 11 million people were not at work and were not included in this job loss number that could have been. So there's a tremendous amount of sampling error and ambiguity and uncertainty around these numbers.
Right. So we estimate that sampling error could be anywhere in the range of 1 million to 8 million more jobs, perhaps, that could actually have been lost during this reporting period. So maybe let's talk about the employment process, how they actually create these numbers. This is a survey that's done. So maybe walk us through the survey process, and then talk about the different types of unemployment numbers. There's U6, U3, U4.
Yeah, so basically, during the survey week, you might get a call from the BLS, and the questions would be, are you employed? Did you work during the survey week? How many hours? If you're not employed, is it temporary? Do you plan on coming back later? Is this, for example, a furlough type of a situation? And then if you're unemployed, have you been looking for work in the last 4 weeks? And if not, you're unemployed and you're not looking for work, why is that? So there are many, many layers that go into this. There are actually 6 measures of unemployment that the BLS uses, the U1 all the way through the U6. The U3 number is the one that's quoted most regularly. That's the official number. That just shows people who are unemployed for temporary or permanent reasons, but they have looked for a job in the last 4 weeks. Therefore, they're included in the labor force, but they are also counted as unemployed. That number increased by 10%, so it's up to 14.7%, which is a new all-time high based on the observable data. But then once you go down from U3, you get into more of the underemployment statistics, where these are folks that they would like to work full-time. Maybe they're only working part-time right now for economic reasons. They would like to work full-time, but they are marginally detached. And they feel like even if I were to look for a job, there's no way I would get it. So that U6 number is sort of all-inclusive. It's not only the unemployed, but it's the underemployed. And that U6 number actually jumped even more than the U3 number. So the U6 number jumped 14% up to 22.8%. And once again, the sampling error is huge. So there's a tremendous amount of uncertainty around that number. But to think, almost a quarter of the working age population in the U.S. is unemployed or underemployed at this time, that's just a huge number.
But also, there's a lot of people who were not unemployed, but who had their salary cut or didn't receive a bonus, et cetera. So pay in general most likely has gone down for a large number of people.
Definitely. Yeah, there's a lot of uncertainty around the legitimacy of the pay numbers that were, or the salary statistics that were reported. But it's likely that a lot of folks, had their wages or their salaries cut, or maybe not. But by the end of the year, they're not expecting a bonus if they were lucky enough to keep their job. So there's a lot of that going on. And then the other big thing in the number is, 7.5 million people dropped out of the labor force. Which was huge. So a number of people just said, "I'm not even going to look for a job. Forget it. I'm done." So, just a lot of stuff going on with this report.
So let's dig a little deeper and look at the weekly jobless claims and what's happened with that report.
Yeah, it's important to remember what the survey period is. So this BLS report covers through the week of April 18th. Now, we're also getting weekly jobless claims. So we know that the BLS report is behind. Since that week of April 18th, an additional 10.6 million initial unemployment claims have been filed. So even though that headline U3 number for April says 14.7% unemployment, if you tack on these additional job losses that happened after that survey was taken, you're probably looking at an unemployment rate of over 21% right now that the BLS report next month will start to show. So that's a key thing to remember. And once again, I mean, if you look at the chart, it's almost difficult to see. The rise is so quick all the way to the right on the chart, but just week after week of record weekly jobless claims.
Yeah. So in context, 33 million people, perhaps, out of a workforce of 155 million, are
Correct.
now out of work. So those are shocking numbers, right?
Mhm.
So let's look a little deeper at the unemployment by state. Each state has a different experience.
Yeah, the first thing is just showing which states have been hit the hardest. Hawaii unemployment rate jumped 32% since the emergency declaration in mid-March. So they're at the top of the list. Kentucky jumping 32%, Georgia 31%. And the idea, one, is to just show which states have held up reasonably well and which states haven't. But then also there's this idea, sort of political polarity that's going on, where there's an idea that Democratic states are keeping the government shut down for longer, because they are, more willing to let this employment crisis drag on and the economic situation get worse. One, for health reasons, and to hopefully make the health crisis side of the equation better. But two, because you don't want to make the economy look any better than it has to be in an election year. So we're trying to show by highlighting blue and red states that there really isn't a lot of rhyme or reason to that narrative, even though it is sort of being peddled in some media outlets. And then also wanted to show when a lot of these worst hit states are set to reopen. And once again, that's basically split. A number of them are still shut down. There are a few that are reopening, even though they technically have not met the standards for reopening that have been outlined by the White House. The poster child for that is Georgia, where they're they've already started reopening, but haven't seen the decline in case counts that you would think are necessary to reopen. So they're basically looking at this as the cure can't be worse than the disease, and the unemployment situation has gotten so bad, I'm willing to reopen the economy to try to help out that side of this crisis, and willing to potentially deal with higher case counts.
Right. So in terms of, there's some interesting statistics on that chart, but if we look at underlying what the sectors of unemployment where that was, entertainment, leisure, those folks were laid off at a much higher rate. So walk us through by sector the unemployment rate changes.
By sector, not a tremendous amount of surprise in terms of which sectors were hit the hardest. Leisure and hospitality, one of the first hit and the hardest hit. So the unemployment rate in that sector of the economy jumped over 30% during the month. You're looking at total unemployment rate in the leisure hospitality industry right now of about a third. And you would expect a lot of those losses were concentrated in the restaurant industry and drinking establishments, things like bars. So you would think that they would be the first hit. It's likely that you get a lot of those out of the way initially during the first monthly BLS report of this crisis. And then it's likely that other sectors would lag and start to catch up. So no real surprises there on that front. But I mean, once again, just to think a third of folks in the entire leisure and hospitality industry right now are without a job. That's tough.
Yeah, but it's even shocking to look at the number of people just in the education sector that were laid off. And if you look at it in terms of the number of people, it's staggering. The other industries that were impacted by this.
Right. I mean, 7.7% jump in education and health industries, but that's a huge part of the workforce. So in individual people, actual jobs lost, you're talking about 1.7 million folks just lost their jobs in that industry during the month. So some big numbers.
So let's move on and look at it in terms of by company size.
Yeah, so defining company size by number of employees before the layoffs began, and you can see, the smaller companies generally their unemployment rate increased higher than the larger companies. A number of reasons for that, the things that we've talked about. A lot of larger companies, we know anecdotally, have been better able to secure funding from a lot of the fiscal stimulus programs, such as the PPP. They've also benefited more from a lot of the monetary stimulus, things like the corporate credit facilities that the Fed has established, larger companies that are investment grade, that are issuing debt and get access to cheap capital and benefit from all the Fed's easing. They might be better prepared to go through this and keep their payroll intact than, unfortunately, some smaller companies. And we know that small and medium-sized businesses employ the majority of individuals in this country. And so that's another reason why you're seeing these shocking jobless numbers, unemployment numbers, is because some of those smaller companies just weren't able to maintain payroll as well as some of the larger companies with more resources.
Right. And though a number of them haven't been able to access any support. And unfortunately, what you don't see here is the smaller companies will have a much harder time surviving, if they can survive at all long term. So after a few months of this, the likelihood that they'll go out of business goes up well over 50%.
Mm-hmm.
Another way to look at the data that's of relative interest is by education level. And it's not surprising the conclusion, but walk us through what we're looking at here.
As you would expect, anytime there's a shock like this, the folks that have achieved less education generally get hit harder. That's the unfortunate reality of recessions and any employment shock. So folks that had less than a high school degree were hit the hardest. The unemployment rate within that collection of individuals increased about 14%. You can see how much it's increased over the last 3 months, but the overall unemployment rate in the U.S. For folks that have not achieved a high school diploma is up over 20% now. And as you move down the spectrum, there's a lot of debate right now over the value of a college education in terms of being able to maintain your job during a crisis. It's clear that there is, within the data shows, there is some value to having a bachelor's degree or better. You can see the overall unemployment rate for those folks is hovering right around 8% in total, jumped 6% during the month.
Is there a silver lining in today's report, if anything?
So one element of the report, when you get the phone call from the BLS and you unfortunately have to report that you've lost your job, you have to say, is it temporary? Meaning, do you expect to come back to work in similar capacity within the next 6 months, or was it permanent? And the silver lining, if there is one, is about 78% of all the folks in the April report that lost their job. So 78% of the 21 million reported that they expect to be back at their same job within 6 months. So that's the hope. It's very difficult, and there's a lot of sampling error here because it's literally just how that person responds to the question. And a lot of these people that are on temporary leave, they're responding based on the information they've received from their employer. And you don't know how this will evolve over time. It's highly likely that the longer this drags on, the percent of folks that would respond and say, yes, I expect to be back in the same job in 6 months, that is likely to decrease. But at this point, it is very high. You expect 80% expect to be back in the same job very soon, and we hope that's the case.
give a great shout out to our research team who really busted their humps to get this stuff done.
Yeah, really great work. Definitely a team effort. Really proud of the resources we have and how everybody's coming together during this extremely hectic time to be able to get this level of detail and analysis done the morning that the report comes out. The ink is barely dry. Really pretty impressive and really proud of our efforts.